Good morning.
Potential uptrend?
Today is June 13th. I am here in the Central Time Zone here in Dallas, Texas. For those of you joining from outside the country, Central Time Zone is GMT -6, which is also Chicago time. So the market is doing what it's doing. It's moving how it wants to move, not how I want it to, but that's okay. I'm not here to control it, not here to predict every move. So I remind myself my job is to just watch and to observe, to stay patient.
Uptrend. Potential uptrend?
So we don't take any action during the market open hours because of this whipsaw potential. So not every move is mine to trade. Not every opportunity is worth taking. So as you can see, there is a huge rally, like an open drive, but trading in the first couple of minutes is very volatile and it can easily whipsaw us. For that reason, we will try to wait for a little bit stable period.
Uptrend.
So we have the consumer sentiment report at 9 Central and also inflation expectations. And that has some impact on the market. So it's better to wait till that thing is over before entering the market. So let's see which other reports are due today. So this one is listing just the consumer sentiment, and we have two reports in here. So this is the auto scale, which is about, right now it's about 10 points, but it automatically adjusts. But the second chart below here is the fixed scale, which is good for trading when you can gauge the range much easily.
Potential uptrend.
So the YouTube has about 20 to 30 seconds lag. Our Zoom trading room has no lag, it's almost real time.
Potential uptrend.
So the Nasdaq futures fell. In general, all market indices fell overnight, and especially yesterday, 7 and 7:30 Central, and they have recovered more than 50% so far. So sometimes the best thing we can do is nothing. Other times it's just taking one clean trade and being done. So I'm not here to force anything, just trying to follow my plan. And that may not always work out. And you will be trading your own accounts with your own discretion. So the signals weren't very clear at this point. If you get a perfect entry,
Uptrend.
But there is a very good possibility of being whipsawed. So for that reason, so just like this. So for that reason, there is no point jumping in late in the game. So whatever the market wants to do, trend, chop, or reverse, that's up to it. And we want to stay focused and take the trades that make sense.
Uptrend.
So is there an opportunity here? So it is risky only because we don't know how much deep the pullback could be.
Downtrend.
So the first downtrend signal against such a strong open drive, we don't want to act on it immediately. And regardless, we will not take any trades until after 9 a.m. Central. Ideally after 9:10. So that's the another reason to stay out. So because after 9 is where you get more sustainable trades. So let's analyze some of the previous price actions. Where this theory holds good. So changing this to our 852 to time frame. Days to load could be, let's say, 20 days. So for that reason, it won't show the the current time yet, or current signals yet. Then we'll just keep. So let's look at yesterday. So for example, this is yesterday's price action in a fixed scale. June 12th. So we start looking at the market from 850 or so. So this is previous close. This is 850 and this was the 9 o'clock. So after 9, 9:10, we can take our first trading action here. So typically we respect the first or second signal, and even if you look at the candle
Potential
structure,
downtrend.
and when this trend breaks with this bull flag breaks out, and if you enter that pullback, it gives one nice uptrend here. Then these downtrend signals are a little bit iffy, especially because against this trend. But what happened here is that it broke out, then this breakout failed. So then there was a sustained downtrend. Other than that, afterwards, it was very choppy. And these signals are
Potential
not that
downtrend.
reliable in the choppy period. And especially after 12, there were not many sustainable trends. So even if you act on the first or second signal, you could catch a small scalping trade. But again, this one is not good, which you never broke out above. So you might better to stay out during this period. So I'm having some internet instability. So then after 12:30 yesterday, so this was till it broke out below VWAP, but it never continued. So I will stay with today's price action as of now. So during this sideways move, if you enter on the edges, there is a potential trade, but after a couple of bounces like this, it can break out on either side at any time now.
Downtrend.
So we have the second signal now. If not for the top of the hour and the upcoming 9 a.m. report, which is due in about 5 minutes, this is a good place to short, but because of that, and we will wait till 9:10 anyway, so we'll be waiting here. So let's talk about Dow theory. It's one of the oldest ideas in technical analysis, created by Charles Dow. Yes, the Dow Jones guy. over 100 years ago. So even today, traders still use it. The principles are simple and they still hold up. But for the markets like Nasdaq, you have to consider the volatility and the bigger context though. So what is Dow theory? At its core, it's a way to understand the trends, how they form, how they behave, and how they end. So market moves in trends. So three types. There is a primary trend, secondary trend, and minor trend. So let's look at daily or weekly chart. So on the daily chart here, as it's approaching near the top, and it had retraced most of the downtrend that happened in February and March.
Downtrend.
So this is the report effect. So the primary trend is the big picture, months to years. The secondary trend is a pullback or rally within that big trend. The minor trend is the day-to-day noise. So we, the scalpers, most of our actions, regardless of which trend we are in, we work on the day-to-day trends, focusing on the minor moves because the account cannot withstand the huge rallies or uh, the huge downtrends all of a sudden. So the Dow theory focuses mainly on the primary trend. And the trends move in three phases. The accumulation phase, smart money enters quietly. Then the public participation, then the trend becomes clear and volume rises. Then excessive phase where everyone piles in, sentiment gets too bullish or bearish. So then the trend often ends. So if you look at the day-to-day volume, this volume alone is not very indicative because it can change very quickly. But if you look at a little bit long term on the 60-minute chart or even on the daily chart, it's a little bit more clearer. So all the news events for the day are over, and we will be getting ready to take some trades in about 5 minutes. So Dow theory is based on two averages, which is the industrial average and the rail or the transportation average. So when the transportation average or the transportation stocks slow down or starts going down, that is an indication of economy getting slow. So today we might compare Dow and the S&P or two sectors. The point is a trend is stronger when more parts of the market move together. But most of the times they do. So if you see here, Nasdaq, S&P, Dow, they are all down at different degrees. And this is Russell. Only crude is up and gold, of course, is up. So the market is still choppy. It may be good to wait till it breaks out in one side or the other. This blue line here is yesterday's low, which might act as a support for today, as it has already broken above it. So these down signals indicate you can take a short here somewhere at this level, where stop being here, but that requires breakdown below this. But if it breaks down, it will move fast. And if you do want to go long, I would wait for a sustained uptrend indication. These blue dots indicate end of wave 2. If you were to think of this as a new uptrend is starting here. So as you know, the waves are fractal in nature. So what that means is, let's say, typical waves move like this, and wave 3 is the largest or the longest. Wave 4 never crosses below, high of wave 1. Wave 5 can be above or almost below. Then we have the corrective period. So within each wave, there can be multiple fractal waves like this: 2, 3, 4, 5, and A, B, C, maybe. So for that reason, what these signals doing here is
Potential downtrend.
they are trying to catch the start of each potential bigger move. And these gray signals, which are just the on tick indicators, they'll try to detect early, but these blue or this magenta, they are the ones that are more confirmed because they trigger on the close of the bar. But sometimes that can be a little late and this can be a little early. So based on
Potential
go with the
downtrend.
go according to the higher context. So this is what I was afraid of here, that once it breaks down. So these two signals were good, but because of the news and everything due, this volatility would have whipsawed unless your stop was way above there. So this will continue, except your stop has to be a little bit wide. So we are at 685. It can easily hit the market open here. The good entry point here would be again at this point, unless it reverses strong. So volume is increasing. unless this thing holds.
Order submitted.
It is not an ideal location, but I entered market order, and usually market order fills at a worse price. So at least the limit order at the middle of the previous bar would have been ideal.
Downtrend.
Unless this continues, it can whipsaw me. So if I adjust the stop, I will get invested in the sunk cost. So if it moves against me, I would better stop out. But entering the market order was the worst decision I made as of now. At least the limit order would have given me better price. All right, stopped out.
Order canceled.
So the next trading opportunity here is if this trend continues in the downtrend, you can go short again, but ideally, this broke down and wait for it to pull back there. So
Order submitted.
usually it will never stop at the first leg here, but I'm not chasing, especially after this first whipsaw. It's not even like a whipsaw, it's a decent stop, but my ideal entry is wait for these long wicks and then enter there. So jumping in with a market order was the mistake there. Entering at the middle of this bar at least, waiting for the middle of that bar at least would have been ideal.
Downtrend.
So the expectation is one thing, execution is the other. And this was the expectation, but the
Order
execution
submitted.
was not there. And this one, I'm expecting at least this much move. Because if it breaks down below, it will continue one more
Potential
leg,
downtrend.
at least this much. But that's only if this will continue. If it starts a reversal here, it will another stop out. Should I increase the stop? Not above that point regardless. See, even here, my entry is, could have gotten a better entry just waiting near these signals. So wherever you see the signal arrow, enter the limit order there, and most of the time you get filled. Even if you are not filled, that's okay. And this fear of missing out is not a good thing. And usually you will get a great location, and then you can quickly move to break even. And that is the ideal and more conservative way to trade. But thinking that it will move without me, we try to chase, and that usually backfires or increases the risk. So unless it breaks down below here, okay, like this one. So now it has to close below this flag type of setup. And if the volume increases with it, the downtrend might sustain for some more time. But if there is a huge wick below, that shows the buying interest, and it might quickly reverse. All right,
Order
so
canceled.
that was the conservative
Downtrend.
target. Whereas if you have two positions, you close one and ride the next one. But as it is hitting the VWAP, I'm not going to chase any further. I got the most of this downtrend here. So couple of improvements to note here. So as I got this signal, and since it has already broken
Potential
out,
downtrend.
and the signal appears at the close of the bar, and if I entered a limit order at the middle of the bar, when you get such a strong one, you would fill somewhere here, and that would have worked out. But the second one also, you could have gotten a better entry here. And then the target, if you want to really push, you can come till 55. I got out at 61, which is okay. At this point, there is some volatility and uncertainty. So as the volume is increasing, it can continue even though this is a reversal bar. But as the volatility has picked up and the trend signals, other than the first couple of signals, the indication will be less. And even with yesterday, when it has paused, and then I took the next one that also messed up with the breakout and breakout failure. And for that reason, it's just better to stay out of the trade at that time. So because of the earlier stop out, which was my mistake, all I have right now is a break even. And the next trade here, it's better to wait some time until some kind of a sideways and then either a breakout or reversal happen. So while that is developing here, let's go back to historical
Potential
charts.
downtrend.
And this was yesterday. So there I am looking at today's chart. So here also, if you want to go one more short, taking the short here would be ideal, as this is oscillating here a little bit. So again, the same concept. So you have the signal, you either enter right here or very close to it in that direction, then that could easily give you the first target at least. So along with the Dow theory or any theory, don't assume a top or bottom too early. That is like a, fading against the trend. So the trend might continue, but to protect or to exit the current positions, you might or don't want to stay in the trend for too long when the trend overextends or something. So from the bigger context, it appears like it can continue, today being Friday, you know, and on the other hand, we also nearing the significant support. This is not based on a technical, just my pure gut feeling here is, it has retraced entire thing. It can rally one more, but eventually today will be a down day, possibly. That even the daily chart has overextended and some minor correction is due, maybe. Only problem with that is that um, it will not happen in our time frame, and it can easily extend some more before going in the favorable direction. So we need to pick our locations wisely. So jumping back to previous days here. So this could have been another opportunity, but the reversal was possibility. So ideal action at this point here is, ignore the left hand side here. This is yesterday or the historical, like I'm scrolling back. So let's see the potential moves here. So somewhere here is wave 1, wave 2. So we are in the wave 3, wave 4 potentially. And potential wave 4. But before I could finish the drawing, it is continuing, which is wave 3 is continuing further below. So as I said, it has completely retraced the early morning open drive, and it's continuing further. So right now, unless there is a 600 offers some support, but if not, middle of the previous bar is where I could wonder which one I clicked the buy
Order
instead
submitted.
of sell. I was trying to, in fact, sell,
Order filled.
but I clicked the buy button by accident. So that's the other thing I need to be careful with these strategy buttons. These are custom buttons where it will picks the previous price bar and or enters the orders. So for example, if I click sell high, so high of the
Order
previous
submitted.
bar, the order is placed. But instead of clicking sell, if I click buy, it immediately goes in the opposite direction. But that one I was able to close favorably. But as we are approaching S2 and 600, all I'm targeting or trying to target here is just first target while staying under my stop. Okay, we are in. Unless this is a strong reversal, we should get our
Order
first
submitted.
target at least. So considering this move, should I close? All right,
Order
so
filled.
that hits our first target. So this thing is still going. Is S2 or somewhere in the 600 could act as our end of wave 3. Again, like any other theory, Elliott waves are speculative and things become clear only after the fact. And anybody can come up with justifications after the fact. And as it unfolds live, things are unclear and it can go either way. Okay, so it has come back to this signal here, but if I look at this in the bigger context, so this is the dynamic scale, which is about 10 points here.
Potential uptrend.
And acting on this previous signal is not recommended. Of course, none of this is any recommendation to buy or sell. So switching back to the fixed scale,
Potential uptrend.
these auto-generated subtitles are okay to the most part, but it has many errors still. Okay, so now there is some reversal here until this area settles, and as we are at the end of this leg here, and also the initial balance is set, which went all the way till 21,800 almost, but not quite. And we are approaching, or we came close to 21,600. So the problem with identifying this wave here or this trend is that it can go all the way up to actually the start of this whole thing, even up to 700, 710, or it can even reverse.
Uptrend.
So for that reason, I will not be taking any action right now. So we have the first signal, but against such a strong downtrend, we will not take action against this
Potential uptrend.
first signal here. And even if it gets a confirmation, the probability is not that high.
uptrend,
So this 700, I'm not sure whether it will hold. And this blue line is yesterday's low.
potential
So on
uptrend,
the daily chart, that's where it is at. And that can act as a resistance again now. So if I'm willing to take risk, and this is kind of a V reversal, I could go long here or here, but I was not so sure. So I did not take any action. So the most high probable trades were, as we acted on, were these two signals here. And this was too late and we could not take that in time. So it's better to stay out at that time. So the first one that I got stopped out was only because of my own mistake that I jumped in with a market order instead of waiting for a limit order somewhere here. But I quickly
uptrend,
recovered that. And then, yeah, even here, when it was late, considering this as the sideways move, and then we got a continuation. I had a limit order at the middle of this bar, which got filled here, and then also hit the first target and closed the entire position there. And then the uptrend signals came here, but again, such a strong downtrend, I was not willing to act on that. And even though it did work, I did not take any action there.
potential uptrend,
All right, so even this uptrend may be overextended as of now. I am switching to the dynamic scale. So if it, wave 4 should not go above
potential uptrend,
this. So in that case, this is just an ABC move. So if it is ABC, now this is X or the continuation of the higher time frame, bigger wave. Or if you say this is 1, 2, then 3. So if you're going counter trend, there is a potential uh, fading opportunity here, but fading does not always work. Now this yesterday's low might act as a support instead of resistance. Not sure how much move it will make or how much pullback it will have before whether continuing upwards or downwards. All right, switching back to the dynamic scale. I will be right back.
Potential downtrend. Potential downtrend. Potential uptrend. Potential uptrend. Potential uptrend. Uptrend. Potential uptrend.
So I still think that this is some kind of a, in the bigger time frame, higher time frame, there is some kind of a corrective move is going on. So within that, waves being fractal in nature, there will be some opportunities, but overall, I'm not sure how long this uptrend will sustain. So as the 10 o'clock central time is approaching, I will be wrapping up soon and call it a day for now, unless I see some very good opportunities. So as we wrap up for the day, or at least for now, let me talk about discipline. And discipline is one of the hardest parts of trading. It's not about knowing what to do, it's about actually doing it consistently. I have learned that staying disciplined doesn't happen by accident. It takes structure, it takes practice. I would say it takes self-awareness, which was hard to do in the beginning because despite knowing what to do, I could not stick to my own rules. And the way to overcome that is maybe start small and then don't add to the sunk cost, because the moment you give a little bit more room beyond the logical invalidation point, it becomes easy to uh, get fused with that idea. So your bias will be wrong. And then when you shift the bias, you will shift too late or at the wrong location. And that gets whipsawed and those mistakes add up. So instead, try to stay with the some high probable entries. And so even today there were chances to fail, but one thing I did is did not give too much room on the first trade that failed. And the second one, I did give some room, but I was not going to move beyond that. Only time will tell. Sometimes we say to ourselves that, okay, I'm not going to violate my rules. But when that time comes, it seems as if only we give it a little bit more room, it might work out. But that easily adds to this sunk cost fallacy. And okay, now that I have spent so much time and money in this trade, I want this to work out. So all the psychologically, all the rules go out the window at that time. So it takes practice and, just accept that. And, we are all human. So first have a plan, and before the market opens, kind of have an idea of what I'm looking for. To me, these signals give some kind of a guideline that beginning part of the signals are high probable ones, and then later parts are not so much. So even here you can see these earlier signals, even though this was because of the economic reports, there was a huge volatility, so you could not trade it. But especially this middle section, now you could argue that it could pull back a little and then continue, but it's very likely it will move down one more leg down basically. So at this point it becomes very less probable. And this reversal here, so on the hindsight it worked out great, but as it was happening against this strong downtrend, there was no guarantee that whether this will give us at least some of our target back or not. So for that reason, I stayed out, and as the initial balance was developing, whether it will retest the initial balance or not, or in fact, this was the end of this. So, sometimes it can retest, or it could retest the other side here. And this is not even the yesterday's high. Market opened at 21,920 yesterday 5 p.m. So anyway, I think staying within the levels, and it also confirms to some of the ICT levels even though ICT levels in the middle of the range may not hold, but they give some kind of an indication of levels. So I think risk management is more critical than the entry itself. So accepting the loss is part of the job, and ideally never chase unless there is some strong, if the volume is increasing or something, but volume increases just before it stops, like here, especially volume on the 1 minute chart is not that reliable. And for that matter, even the 5 minute or 30 minutes here, see the volume is decreasing, but it went both ways. So, discipline gets shaky when I am tired or stressed or even overconfident. So, I need to watch how I am feeling. If something is off, I should step back. That is what I tell myself, and I'm getting better at it. So, sometimes the best way to stay disciplined is to take a break. Discipline isn't about being perfect, it's about being consistent and staying in control, especially when it's hard. So that's what I try to do, one trade at a time. So for now, that's it from me for today. Markets will always be there on Monday. So right now, it's time to step back, breathe a little. So whatever kind of week you had, good, bad, or somewhere in between, you
Potential
showed up,
uptrend.
you did the work, and that counts. So now, it's time for me to shut down the charts, close the tabs, let my mind rest. So it's good for my health, good for my trading too. So have a nice weekend, spend time with the people who matter. Let your brain reset. Monday will come soon enough and we will be ready for it. Until then, have a great weekend, my friends. Take care.